Enbridge, ticker ENB, is widely considered a jewel as far as dividend stocks go in the Canadian investing space. Boasting a 7.73% yield and paying 91 cents a share quarterly, it's one of the highest in the Canadian market. But does this high yield dividend work well for my investing strategy? In today's video, I'll give you a portfolio update. I'll talk about Enbridge's specific performance in my portfolio and what plans I have for it in the future. And as a bonus, one of my trades will probably surprise some of you, so stick around to the end. If this is content that you like, hit the subscribe and turn your bell notification on. But most importantly is to hit that like. By doing so, you help get these videos out to new beginner investors trying to get started investing in the stock market.
Hey folks, I'm Darren, and this is the Crazy Canuck Investor, a beginner channel designed to share my investing journey and all the knowledge that I learn along the way.
Okay, let's jump into things. My portfolio is up to $125,143, and I'm going to break down each account for you. My cash account is up to $39,178, and it currently pays me 4.5% interest. Over the last month, my cash account paid me $143.48. Part of any good investing strategy is to have an emergency fund. This cash account serves as this emergency fund, and if you're not sure about what the other steps are, you can watch this video here. Our kids' RESP is up to $54,940. This is a robo account, and therefore there is a small month-to-month fee that we pay to have this account managed. We make regular deposits in it and take advantage of the government grants that are provided on a monthly basis. Wealthsimple is a great platform to use both in the mobile and the desktop version. My referral link is in the comments section below. My RRSP currently holds $11,453 Canadian and $2,869 US. The all-time returns on this count are $224 or about 2%. From my last portfolio update in this account, we received $40.92 USD from QQQY.
My tax-free savings account is up to $15,208. Over the last day, it's up $19.37. Over the last week, it's up $200.52. Over the last month, it's up $15.68. In all-time returns, it's up $623.60.
Now, I said I wanted to talk about Enbridge and its performance, but before we do that, I'll talk about the trades that I made this week and the dividends that I received. So since our last update, Enbridge paid out $7.99, REI.UN paid out $2.43, HYLD paid out $6.60, and HMAX paid $3.49. Now, like I said, there's a bonus trade that might surprise some of you, but let's go over the other trades first.
This week I had $1,183 to trade with.
I bought 8 shares of VFE, which is Vanguard's S&P 500 fund. I also invested into the Canadian market through the ETF XEI, which is BlackRock's product, and I bought 7 shares. I bought 2 shares of VRE. I bought 2 shares of the ETF QQC, which invests in the NASDAQ 100.
And now for the trade that I figured would surprise some of you, and that's Hamilton's Canadian Financials Yield Maximizer ETF, otherwise known as HMAX. The highlights of this fund are that it has a target yield of 13% with monthly distributions. The ETF itself invests in the 10 largest financial institutions in Canada, with approximately 75% of that exposure to the top 6 banks, and it's using a covered call strategy. I figured that because it was investing in the top banks in Canada, that it was a fairly sure bet when it comes to utilizing that monthly return, which I would then turn around and invest into other funds. And unfortunately, you can see this fund only started this year in January of 2023. And you can see by this chart from Yahoo that the price has steadily declined over time. And based on that and my total returns, which you can see here, I've only received $19 in returns. And unfortunately, the price of the stock fell all the way below my returns. So oftentimes they talk about covered calls where you're losing the upside. Well, I'm definitely feeling the loss of the upside in this fund. Now, I didn't really have a lot of money invested in it, so it wasn't a big hit to sell it. And of course, when you use Wealthsimple, there's no cost for the trade itself. And in the end, I basically broke even. So unfortunately, I had to sell it, but I turned around and used that money. It was included in the purchases that I made today. And I think over time that those funds will have a better total return. Now, I'm not saying that all covered call strategies are not okay for your returns. It's just this one didn't work out for the short period of time that I was holding it. All right, so let's talk about Enbridge now. Now, you'll have to bear with me because I am a beginner investor, so I don't have the requisite skills to find a fair market value of a stock. Now, it is my intention to continue my learning in order to be able to do this, but I think Enbridge goes to explain why it's important to come up with a fair market value for a stock if you're looking for upside or growth and a dividend. The dividend can be a bit of a trap, you might say, is what I'm learning. So looking at this graph for Enbridge, we can see that from the early part of or mid 95, passing 2009, there's some steady growth in Enbridge's stock. And then it seems to peak out and it kind of goes up and down. But there is really no more growth in their stock. Now, I've listened to some podcasts and some YouTube channels that do reviews on Enbridge. And what they're telling me is that the cash flow for the company is not able to sustain the large dividend that they're paying, and there might be a cut in that dividend. So when we look at their cash flow, that simply means that the money that they're bringing in is going to pay off their debt and the dividend, and they're not able to raise the dividend or support it over time. But more importantly, the stock price is likely not to appreciate. And that gives me some concern as a new investor and as I learn. So right now I only hold 9 shares of Enbridge, which is a total of about $427. And since I purchased the stock, it's been consistently down from the price that I purchased. And right now it's down $8 or 1.84%. Now, I was dollar cost averaging into the stock. So when I had some money, I would put money into it. So I've had 3 separate payouts, which obviously I have increased over time. When you look at how much I'm holding and how much the stock is down, it's certainly not been a very strong performer. That doesn't mean that it may not change in the future if the company continues to grow, but it certainly gives me some concern as to whether or not I should continue investing into this company if it's not showing steady increase and a good prospect for the future. So for now, it's not performing well in my portfolio, and I don't really want to put any more money into it right now. So currently I have 2 different ETFs, BDY and XEI. Both of these ETFs hold Enbridge within them. So when I say I don't want to put money into the individual stock, I'm still putting money into them in these 2 particular ETFs. And both of those ETFs are not performing amazing, but with high interest rates in Canada and the economy the way it is, I believe that when the economy starts to turn around, that those holdings will improve. So for now, I won't put any more money into the individual holding. I want to let it come up to above the stock price that I purchased at. And I'll continue to put money into the 2 ETFs in order to still get some exposure to the stock and just lessen my risk.
Thanks very much for watching, and we'll catch you in the next one.